We got Dan on the line. What do you want to ask him?
So would you be able to share what's sort of your process for raising money for your deals?
I think the best way to start is to just talk to your sphere of influence, as people like to call it, right? Your friends and family. And that's a huge thing because they already have that first level of trust with you. So really, starting with that friends and family sphere of influence, and you'd be surprised how many, if you're successful, they're going to tell their friends and their colleagues and say, hey, invest with Jahlen because, I just made 20%. I'm making 20% return on this deal. It's unbelievable.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. Got another great show lined up for everybody today. It's another one of our Ask the Expert episodes. Once again, two great people on the line with us. We've got a guy with a ton of experience in this and other related businesses, Dan Odabashian, and a very motivated and energetic aspiring investor, Jahlen Brown. So bios for both these gentlemen are going to be in the show notes. So if you want to learn more about them and their bios, check out the show notes. But that said, Dan, you're going to be in the hot seat first. So welcome to the show.
All right. Thanks for having me, Brian.
Yeah. Thanks for taking time to being on. I appreciate it.
Yeah.
So let's start talking about you. Tell us a little bit about yourself, your background, and what led you into multifamily.
Sure. Yeah, it's somewhat of an interesting story. I've been told. I graduated from NYU in 2005 with a degree in finance accounting, and did some various internships and such on Wall Street. I really thought that's the path I wanted to go down, and it turned out it wasn't quite as exciting as I thought it was going to be. Not like the movies. It was a little boring, to be honest, in my mind. So at that point in time, online poker was booming pretty hard, and I had gotten into that, was dabbling in that a little bit, and was actually able to earn some significant money and forego jumping into a typical day job. So decided, I knew that was never really going to be like a career, right? I was 22 and didn't have many responsibilities, and so decided to make a run at it, and did quite well, well enough to start looking at 3, 4, 5 years down the road. Started thinking and looking to ways to invest the money I was making into business of some sort. And I've always had an entrepreneurial mindset, and always had a little interest in real estate as well. So kind of started running some models with my finance background and on investment properties. And at that time, in our market up here in Albany, New York, capital region, you could find some what appeared to be very profitable deals. And so decided to buy, a couple 2 families, 3 to be exact. And I lived in one, and, was still, making money playing poker, but the industry was declining due to government regulation and a few other factors. So I was managing those properties myself and enjoyed it somewhat. It got me out of the house doing things around the properties, and, started to realize that I wanted to scale up my own, like a large investment portfolio. So then also realized that, well, I can't do all the management work if I want to own 100 units, right? Or even 50 units. So started a property management company, and started taking on some third-party clients, and basically grew that company in parallel with my investment portfolio over the course of 5 to 7 years. And we currently manage about 300 units, about a third of which I have ownership interest in, and actually expanded the company into a vertically integrated, situation with a brokerage and a management company, and also an acquisition arm. So, we have a team that's working on raising capital for acquisitions and doing real estate syndications now. And, the larger deals I did coming up weren't quite your typical syndication. They were technically JVs that were, but, friends and family capital that invested with me, that were, passive partners, but not in the legal sense. So, over the last couple of years, we've started growing the capital raising side, the syndication side into like a more formal acquisition
Mhm.
side. So, that's where we stand today. It's fun. It's a lot, there's a lot going on
Yeah.
between three separate things. So
Yeah, and you got your hands into several different aspects of the business, and I'm assuming there's a lot of synergies there. You have your own management company, managing your assets plus other people's assets. I think there's a lot of wisdom there, and quite frankly, one of the things that I think we've had the most difficulty with is just the management, of the properties, the professional property management, but. You basically control both arms of that, which, like I said, I think it's a really smart way of doing it.
yeah, I mean, it's been a huge selling point for a potential passive investor. That's one of the first questions we get on an apartment deal.
Mhm.
Who's managing these properties?
Yeah.
Well, it's our guys. Like we have mid-level management, we have maintenance people, we have leasing agents, we have everything. So everything's all under our hood. We're accountable for everything, and that's a big, in an investor's mind, I feel like that's a big, positive. So
Yeah, it definitely is. I mean, if you've got the management company already set up, you're controlling. You have a lot more control over the investment property or the investment opportunity itself. Because you're able to not just manage the managers, from a client relationship, but you're doing, they're essentially your employees on both sides of the fence. So that said, just for the listeners, we had one of your partners on the show, not too long ago.
Yep,
When
Matt.
did you and Matt come together?
That was about two. So Matt was basically the
Mhm.
key person I partnered with to start the formal capital raising
Mhm.
syndication arm of the company. So that was
Yep.
about 18 months ago, 2 years ago,
Okay.
right around, right before the pandemic. So yeah.
Yeah, and for listeners' sake, I'm going to throw a link to the episode with Matt Whitermore into
Right.
the comments. He's also on an Ask the Expert episode, and really smart guy. So very much appreciate you coming on the show too. So let's talk specifically about one of the deals that you guys have done. Pick, like I said before we recorded, pick your first, pick your favorite, pick your most recent, whichever one you want to talk about.
Yeah, I mean, maybe I'll pick what I think is the most interesting. I was lucky
Mhm.
enough along the way of building up the management company and acquiring active cash flowing apartment. I was lucky enough to get into some development projects of new construction, adaptive reuse construction. We've done some smaller things, but the biggest one was we converted a 60,000 square foot old brewery in downtown Albany that was operating as a oil and gas distribution company for the last 50 years
Mhm.
in 75 market rate luxury apartments, which also had a micro unit element involved into it, which is pretty, new to the capital region area. I know some
Yeah.
larger metro areas, they've been doing it for years, but so, pretty interesting on a lot of levels. We syndicated $4.5 million worth of tax credits on that deal
Mhm.
to provide, the bulk of the equity,
Nice.
and learned a lot. I don't typically like to dive in head first on things because you don't know how shallow the water is, but I would say that was head first dive into the shallow end, and luckily, was able to not break anything. Yeah, I
Yeah.
didn't have a lot of prior experience in construction. I knew nothing about historic tax credits.
Mhm.
And I could do enough research on micro units to know that they were going to be a hit in
Yeah.
this area. So
Now I've heard a lot about the micro units. What are the square footage of your micro units?
yeah, so ours were, we actually had three different
Mhm.
types of unit, and the smallest ones ranged from, like, I think the smallest one was high two, was like 275 square feet,
Mhm.
and those went up to about 425, and then we had
Okay.
another level of, like, which wouldn't typically be considered a micro unit, in like the mid 5 to 700 square foot range, and then
Mhm.
we had some, a few bigger units that were 800-900 square feet.
Okay.
So yeah. And,
All right. Yeah.
coincidentally, the micro units were the first ones, like the 275 to 400s were the first ones to go, because our rental market has a big population of, medical students, law students, a lot of
Yeah.
higher level graduate programs, government. So a lot of single people looking for housing that aren't necessarily going to be here super long term, maybe 3 to 5 years.
Yeah.
So micro units are
You
total.
know, and it's a growing trend among the millennials. One thing, and you've done this obviously, is keeping your pulse of what people are looking for. And a lot of millennials are looking towards that. They're looking at, okay, I don't need all of this space. All I need is a bed,
Yeah.
a small kitchen, and I can live with that. And it gives you a lot more bang for your buck from their perspective as well. So you have some of these younger professionals coming in. They want to live close to where they work, but they don't want to spend the big dollars. And it's a perfect solution for them. And you were able to come in and capitalize on that growing trend. And, not surprisingly, those were the first ones that rented out. So,
Yeah. And, it was interesting in talking to the banks when we were underwriting for the construction loan.
mhm.
It was, it's always tough to get a bank to wrap their head around something that's not, status quo, right?
Right.
Especially in our market. So, the question kept coming up, well, the price per square foot is this, and that's insane for this market. And I just said, look, it's renters don't think in terms of price per square foot. They think of how much am I paying for this apartment?
Yep.
And we're actually able to offer lower rates for those micro units than any like standard 1-bedroom new construction apartment elsewhere in Albany. Those are going for those will start at anywhere from 13, 14, 1500, where ours are starting for, 950, 1,000, just because we're able to get more units in. And that's a much more attractive price range to a graduate student on a fixed income. And, they got, it was tough, but we got it done. And that's exactly, they don't think about how much they're paying per square foot. They think about how much they're paying per apartment.
Yeah. Yeah. That's exactly right. And having been a graduate student once upon a time, I think you're not too far off of what the footprint of an average dorm room is when you look at that from that aspect. It's basically an off-campus dorm room just to put things in perspective. So all right. So one question I really like to ask everybody, and you're not going to be an exception, so here it comes. What is your big burning why?
My favorite question.
Yeah.
When I first heard this question a couple years ago, and I didn't understand it. And I think I understand it a little bit better now, but I like to answer it in two parts. Like for me, on a personal level, every day is just really interesting in what we do. You're meeting new people, there's new challenges. And for me, I just kind of need that stimulation in my life. And maybe it's just the way my mind works, and that keeps me, going. But, on a more like higher social level, I think for me, it's really satisfying to own, manage, create spaces in community I'm living in. I walk by my apartment. I live in downtown Albany. I walk by a lot of my apartment buildings every day that we own and manage, and just to have, a positive impact on people's personal lives. I mean, I always say to people, what's different about real estate? We talk about like collections and management, and not like we're a credit card company or a cable, internet company. If you don't pay the bill, you can just turn it off, right? These are where people are living. So there's just a whole nother level of social responsibility that's involved with that. And that definitely gives me some gratitude, so that's kind of my why. And
that's one thing. I wish I was closer to the apartments that we own. But I can't imagine being able to walk by those every single day and just say, hey, look, that's something that I'm doing. I'm providing housing for all of these people, and it is something you can absolutely be proud of, and good for you to be able to see it every day. I mean,
sure.
That's amazing. So another question I ask everybody, and just to see what's on the horizon for you, what's next coming up for you?
Yeah, we got a lot going on, a lot of new stuff going on.
Mhm.
We've recently dipped our toes in the water of the RV park
Mhm.
campground world. We purchased our first campground in early August down
Yep.
in the Western Catskill Mountains. It's called Covered Bridge Campsite, and that's a pretty interesting property. It has a mile of frontage on the Willowweemock Creek, which is a
Mhm.
famous trout fishing stream in the Hudson Valley. And that area is actually, unbeknownst to me, until we started, we dove in there, is credited as the birthplace of American fly fishing. So a lot of
Oh,
history
really?
there. Yeah, a lot of, and yeah, it's pretty interesting. And so we get a lot of, fishermen. There's a lot of hardcore fishermen.
Mhm.
There's a lot of people. It's, an hour and a half, 2 hours from Midtown Manhattan, depending on traffic. So we get a lot of, city folk just looking to escape. There's
Mhm.
no cell phone service really. So a lot of people looking to escape. It's really more of a rustic campground than your traditional RV park of what you
Mhm.
think of, RVs stacked up.
Yeah.
And there's 48 RV sites, 22 very popular camping sites. So, we took over and are implementing somewhat of a development plan with renovating some bathhouses
Mhm.
and a ton of forestry work. We implemented an online booking system, which we saw immediate returns on
Oh, yeah.
uh, August, September, and October. Like well exceeded our expectation of what we would have gotten. So we really see a great opportunity in this asset class,
Mhm.
because what was happening was the apartment deals cap rates were getting compressed. We
Yeah.
saw near, downstate New York City money coming up to the Albany market and investing in cap rates that they were comfortable with. And so, the seasonal RV park campground model is a great one because, a lot of you have the seasonal camper component that pay all the money up front before the season.
Mhm.
So, there's no collections issues. And it's just a different ball game because it's people who are vacationing and
Yeah.
really are enjoying being there, and they're there to vacation and enjoyment. So just a lot, different attitudes than managing somebody's
Yeah.
domicile, so to speak,
Yeah, I
right?
mean, a lot of fascinating things about it. And you mentioned seasonal. And do you guys keep it open over the winter? I mean, I imagine if you did, you probably wouldn't be full every time. But what do you do in the off season with that?
It's completely shut down. So the
Mhm.
season is May through October. And
Okay.
there's a few different reasons for that. One being obviously the weather. The Catskill Mountains just gets absolutely, you
Yeah.
know, pounded with cold and snow. And B, basically the way it's zoned and the permits through the Department of Health only allow for the 6 month
Okay.
season. So, that also affects things like operating expenses, like taxes, insurance as well.
Mhm.
So
Yep.
you see some benefit on that side of things as well.
All right. Interesting. Yeah. Fascinating stuff. I remember Matt talking very briefly about it, but he didn't go into a lot of the details. But I grew up, fishing for trout in, Utah mountain streams and whatnot.
Sure.
Maybe one of these days I'll come out there and go to the birthplace of fly fishing. So, um,
Absolutely. Yeah.
yeah.
Yeah. We'd
Um,
love to have it.
yeah, it'd be great. Well, that's it. We're going to shift gears right now. And we got Jalen on the line. So, Jalen, welcome to the show.
Thanks for having me, Brian.
Yeah, absolutely. So, first question for you is going to be the same as the first question for Dan. So, please tell us about yourself. You give us an idea of your background and what's gotten you into apartment investing.
Yeah, my name's Jalen, and similar to Dan, I went to college, studied finance and real estate, and worked a little bit in the corporate world as well. Most recently, I was an asset manager at a multi-billion-dollar private equity firm, and we
Hmm.
had a few $1 billion of industrial and multifamily assets that I was able to help manage.
You
And
say it
before
like it's no
that,
big deal. We just had a few $1 billion worth of assets. So, anyway, I go ahead. Sorry for interrupting.
yeah, it's a good point. It's sort of once you start working with the larger numbers, you sort of get desensitized to a lot of the
Yes.
smaller things that investors like us really want to go after.
Hmm.
But before that, I also did underwriting for a multifamily syndicator. And
Hmm.
right now I'm trying to break off and do my own thing. and my target markets are San Antonio and Houston.
Mhm.
I've been sourcing and underwriting deals, but don't just have one quite yet. Still
Yeah.
working on it.
Well, your professional experience, lends itself very well to this business. And I'll tell you, something about that $1 billion comment I made when I first started getting into the business. $1 million property, looked like it was too out of reach for me. Just because of the relative sticker shock once you get into a 7-digit number. But I think having worked with those larger numbers is going to put you ahead of a lot of people because you're used to working with big numbers and it's not as scary, so to speak. And I'll be honest, I think there was a lot of intimidation on my end when I started looking at properties that were like $6, $7, $8 million worth, and now we own a handful of those. But anyway, I think, like I said, your professional experience so far is lent itself very well. So what is your motivation? What is your big burning why?
Yeah, that's a good question. For me, it really is just financial freedom.
Mhm.
I didn't really realize this until towards the end of high school, once I discovered, like many other people, Rich Dad, Poor Dad.
Mhm.
I read it really quickly. I think it just took me a couple of days, and a lot of things sort of started to make sense for me. Growing up, my parents, they would lose their jobs. We'd be struggling, and it wasn't really
Mhm.
easy for us. And it was hard to understand because, they would go to work all the time. They'd show up every day, they'd come home. But after all that work, they weren't really getting to where they wanted to be. And I realized that's not really the life I want to build for myself and my
Mhm.
family. And you sort of need to do something different if you want to have different results. And
Yeah.
that's my why for multifamily investing.
I have had a similar background, and something you said reminded me of something I said when I was, I don't know, I imagine I was probably, 7 or 8 years old, and incidentally, I was really good at math when I was a kid. And I remember asking my dad once how much he made, what was his salary? And he said at the time, I make $30,000 a year. And this is 1980 something. I'm not that young anymore, but, and I remember just doing the mental math and I said, wow, Dad, in 33 years, you'll be a millionaire, and just seeing his expression, it was just like, it was almost like, I thought it was the most amazing thing. And I think his expression was like, yeah, that's never going to happen, but yeah, seeing parents and stuff like that, just, yeah, I think your parents always want a better life for you. And I think a lot of people, same thing, want a better life for themselves and for their children too. So, well, that said, let's do what we can to help you out here. We got Dan on the line. What do you want to ask him?
Yeah, so I know you have a pretty similar background to me, Dan. You went to NYU, one of the most prestigious colleges in the Northeast. And I'm assuming you built a pretty good career for yourself before diving in. So what really pushed you to start multifamily investing? Because so many of the people I really meet with, they sort of work in the industry for 10, 20, 30 years, and they sort of build a career out of it, but then never end up really owning anything for themselves.
Yeah, no, that's a great question. It's funny because when you said what your why is, that's probably how I would have answered that question when somebody asked me when I was in your position, right? What really drove me was that financial freedom, and I had like an opportunity that probably 99% people in this world would never have to, a leg up, an inside track on like high level Wall Street jobs, or breaking into that world. So it was definitely a tough decision. But I saw a lot of my friends and classmates at NYU who were just miserable, working like literally 80, 100 hours a week, 7 days a week.
Yeah.
And for me, I just thought there has to be a better way. And that coupled with, it wasn't after my coursework and doing some internships and spending a little time in that world, it just was a lot less appealing to me than I initially anticipated. So I said, I gotta figure out a different way here. And that's, how, what my mindset always is and I think it's a good way to approach things if you're getting frustrated or, bored or complacent. You got to take a step back and really evaluate what you're doing with your life and your career and anything really. So.
Yeah.
Mm-hmm.
Yeah. Solid.
Yeah. Yeah, I guess so. Shifting gears a little bit, I know you mentioned you're sort of building out your capital raising arm of your business. So would you be able to share what's sort of your process for raising money for your deals? So let's say you just meet an investor. Let's say you know they're accredited or have a strong interest in investing in real estate.
Sure.
What's your process once you meet them to converting them into an actual investor?
So to back up, we actually have we're always looking for investors and I think the best way to start is to just what everybody does, talk to your sphere of influence, as people like to call it, right? Your friends and family, and you'd be surprised if how many people are interested in, and it's an awkward conversation to have because you have a prior relationship with these people and probably somewhat of a personal relationship with these people, but that's a huge thing because they already have that first level of trust with you. So, and an investor's worst nightmare is losing their money, right? So they're always thinking worst case scenario. So, they're saying, well, I've known, Jalen's been my son's friend since, for 10 years. He's going to do everything in his power for this investment not to go sour. So really, starting with that friends and family sphere of influence, and you'd be surprised how many, if you're successful, they're going to tell their friends and their colleagues and say, hey, invest with Jahlen because, I just made 20%, I'm making 20% return on this deal. It's unbelievable, and getting tax benefits off of it. So, but, to answer your question regarding meeting an investor with no prior relationship and determining whether they're in credit or not, we usually have an initial call with them that lasts 15 to 20 minutes. And the call is really them vetting us, but we're vetting them too, right? So we want to know about their prior experience in investing, and then we'll chat about what deals we've previously just done and how those are shaking out and return metrics on those, and then we'll if we feel like there's somebody that is potentially accredited and would be a good fit for investing in our deals, then we'll pitch them on, briefly pitch them on what we're trying to currently raise capital for. And, usually that conversation will end with us sending them an executive summary on the deal or deals, and also an investor suitability questionnaire, which is basically a bunch of information about their personal financial situation that will tell us whether they're accredited or not. And then we know we can move forward from there with them as a potential, limited partner in one of our deals.
Yeah. I'll add my 2 cents. I mean, our process once we get them on the phone is very similar, but if you're starting with friends and family, I think the biggest thing is just talk about what you're doing. Tell people what you're doing. And what I found with my close circle of friends and family is a lot of the people that I thought for sure would invest were the ones that were just like, hey, well, congratulations, that sounds fun. And a couple of people who I thought would never invest ended up saying, wow, that sounds awesome, I'm really interested, can you tell me more? And what I found is just by telling people what you're doing, a lot of people will self-select. A lot of people will start asking those follow-up questions, and that's really who you focus on. So end of the day, talk to more and more people about what you're doing. Spread the enthusiasm you have. Enthusiasm's contagious, it really is. And let people self-select, let people ask questions. And a golden question that I love is when you're telling somebody about it, at some point you can just say, hey, do you know anybody who's interested? And once again, people will self-select with that question. It's very low pressure, for you asking, very low pressure for them on the receiving end, but if they're interested, once again, they're going to self-select. So
Yeah. So have you guys ever been in a situation where someone is interested and wants to invest with you, but they sort of don't want to be a passive investor? They sort of want to be more active in the deal. How do you deal with that? Do you guys just tell them no, or do you sort of try to make room and try to bring them on? And what's pretty much a good response to that?
Yeah, I mean, for us, it's high. We get that a lot for sure. I've also, I have, I think 30 plus management clients who I ask all the time, like, hey, you should be investing in these deals instead of just trying to buy 2-family, 6-family, 10-family properties on your own. But for us, it's very highly dependent on the type of deal, and probably more so on the investor's experience. So, if they have no previous experience in real estate in general, like why would you want a joint venture with them? But if they do, and they're bringing that aspect to the table and providing that value, then it's definitely something we consider, because that's an additional level of value that, it's not just somebody writing a check and signing an agreement and, getting a quarterly report. So, I think it's really, you got to really evaluate the situation properly. And again, like I said, take a step back and say, don't get tunnel vision into, we only want, limited partners and passive investors, because there's a lot of people out there that can provide significant value through maybe their operation or just their general knowledge of and experience to, what you're trying to do.
Yeah. I think something that Dan said on the answer of the previous question was, on that investor call, you're vetting the investors and the investors are vetting you at the same time. You do have to make sure it's a good matchup, and end of the day, you got to make sure that, your investment opportunity works for the person coming in. So I would say, don't be afraid to tell somebody no. I told somebody no a long time ago, and they've actually partnered with us on several deals since, so it's one of those things where, be honest with them. And there are times where you'll be able to find synergies with people, but there's times where, you just have to have, the fortitude to say, I don't think this is a good deal for you. I mean, it sounds like you want X and we are providing Y. So from what I'm hearing from you, I don't think this is going to be the best opportunity for you, but, maybe here's how we can partner in future endeavors type stuff. So I would say just be honest with people, be forthright, and people will respect that.
Definitely.
Yeah, that helps a lot. Yeah. So Dan, I know you do deals different than just your typical apartment deal. I know the thing that's popular right now is you buy an apartment, or maybe it's a 1 to 4 unit, you fix it up and you raise the rents, but you're actually doing redevelopments and RV parks. So what's the reason for you doing sort of something out of the norm? Is it easier to just get a deal? Are they easier to raise capital for, or get better returns?
Yeah, I mean, kind of well, I wouldn't say they're easier to raise capital for, but somewhat all of the above there. It's tough. Real estate's tough because what I've learned over the years is there's a very low barrier of entry, right? There's a lot of people out there that can purchase a 2-family investment property, and they don't need any type of license or qualification to do so. So this creates an environment of, competition. So really, you have to think outside the box. You have to be creative. You have to separate yourself from the herd. And that's really how we landed on RV parks and campgrounds. The market was getting super competitive. Cap rates were getting compressed. And the whole take a step back and evaluate things like, what are we doing here? We can't buy things at 5 and 6 cap rates. There's no meat on the bone left in the deals, after we pay out our investors. So for us, it was really just, we got to go in a different direction. Maybe the market will cool off. The other aspect to that is you got to be creative when you're sourcing your deals. There's a lot of brokers out there that are peddling a lot of deals, and
Mhm.
our motto has always been go direct to seller first. And we actually created a system that, it's more of a data information system to gather, contact information for owners, and just hit the phones and start calling people who own properties and try to get them to sell them to you. What's the worst that's
Mhm.
going to happen? They're going to say no, right? So,
Yeah.
um, you know, that's a lot of people fall into the trap of I'm just going to do what the next guy's doing. The guy's doing next to me, and he's successful, so I'll be successful. But that the markets quickly get diluted, and especially in real estate. I did that construction project a couple of years back, 2019. We completed that, but haven't really been interested in doing another one because everybody's building new construction apartments now.
Mhm.
There's 400 new market rate units in downtown Albany alone, and that's not, there's 3 other large metro areas within 20 miles, and there's new construction happening there. So how can this not be getting diluted, right? So we saw campgrounds and RV parks as something not necessarily that people aren't paying attention to, but just a less competitive environment with better returns. And I think like self-storage was like that a few years back, and mobile home parks in some respects. And so you kind of gotta not so much be, I always say I never want to be a pioneer, but I don't want to be at the back of the line. So
Mhm.
maybe somewhere towards the
Yeah.
front of the line.
Yeah. And I think quick answer to that, is you keep your finger on the pulse of the market and you're ready to pivot is what it is. And, what Dan's doing is exactly that. He knows his market well, and he made a pivot to something that was working a little better than the traditional model. And, there's a lot of wisdom in that, but knowing your market and knowing the dynamics of what's going on, are going to give you the information you need to be able to make those changes. So we got time for one more question, Jalen. So, if you've been saving one up, now's the time for it.
Yeah, my last question actually was real estate. At the end of the day, it is a business, and it's very hard to do it all alone.
Mhm.
So how do you properly vet a potential business partner and make sure they're the right partner for you? Um, you're really you're sort of in a relationship with them for 5, maybe 10 years, and it's very hard to just sort of get rid of them. So how do you make
Mhm.
sure that you have the right person and they're really on the same page as you?
Yeah, no, that's a great question, because I think that's where a lot of business partnerships fall short, is both parties, or however many parties there are, don't really sit down and properly evaluate like what it is that they're trying to accomplish, and what each person's bringing to the table. And they kind of just jump in and say, well, you invested in multifamily, I invested in multifamily, let's join forces and we're going to be twice as big. Well, that's not really the case, right? So I think for me, I've had business partners come and go over the years, and I feel like right now I'm in a pretty good spot with the partners I have in place with New Scotland Development. And I think that was a process of saying, okay, what do I do well, and what do I not do well, more importantly, and who can I find, what type of person, what type of professional, what type of skill set do I need to find that fills that gap? Because if you're just partnering with people who do the same thing as you, it's never going to work.
Mhm.
And that's a common mistake people make. I've seen other business partnerships go sour over that very thing. And so everybody should be bringing something different to the table, not the same thing. And if you can find the right potion there, you're going to be in good shape. So
Yeah. Yeah. And I mean, it is a relationship, and you're right. And I would approach it the same way you approach other relationships, is, try to collaborate on smaller things before you jump into bigger deals, so, our company came together pretty quickly, but, we were collaborating on underwriting. We were collaborating on a lot of things together, so, once first person out of the Four Oaks crew that I met was Eric Shirley. And right after we met, we started sharing our underwriting. We were looking in the same areas, and when a property would come over across my desk, I would do my my quick analysis of it, and I'd send it over to him. And slowly over the course of several months, we built up trust in each other, and we knew that we had similar ways of thinking of things and everything else. But without that initial collaboration, we never would have agreed to partner on something. But I think it's the same thing with any other relationship, whether you're dating or or a marriage or anything else, is you have that get to know each other time, that dating period where you're collaborating before you tie the knot on a deal that's going to put you together for 7 or 10 years. So, well, that said, we are pretty much out of time here. So one question for each of you to wrap things up. And Dan, you're going to be able to go first on this one. How can listeners learn more about you?
Yeah, you can check out our website at newscotlanddev.com. All social media outlets. New Scotland Capital is our acquisition syndication arm. So Instagram at New Scotland Capital. My personal email address is dan@newscotlanddevelopments.com. And I'm happy to talk to anybody anytime. I love meeting new people and learning about what they're doing and sharing knowledge and for everybody to benefit from. So
love it. And for anybody listening, his contact information is going to be in the show notes as well as the website. So definitely check him out, check it out, and contact him if there's anything you heard that's interesting to you. Jahlen, same question for you. How can listeners learn more about you?
Yeah, if you want to reach out to me directly, the best way is probably on Instagram. My name is @Jahlens Brown. I'm also on LinkedIn. I actually do have a free gift for your listeners as well. Awesome. I realize I have some pretty unique information given my institutional background. I think one of the biggest reasons deals fall through is because of poor or lack of due diligence. So I actually wrote a guide to help with it. It's completely free for active and passive investors, and you can find that at arlencg.com/ebook. There's currently no upsells right now, maybe one in the future, but want to spread the word and hope it helps someone in the future.
All right, sounds good. And we'll have a link to that in the show notes so that anybody who's interested can grab that due diligence handbook. So to both of you, thank you very much for coming on the show today. It was a great conversation, good time, and happy to share some time with you guys.
Thank you so much.
Thanks, Brian.